Okay, ladies and gentlemen, well, welcome to all of you that are here live with us and all of you that we've got online. It's great to have you. Tonight we're trying something completely new. We've got Richard Dunn here and we've got Steve. Basically, Richard is an expert in Australian property and Steve is an expert in Australian immigration. What we're looking to do this evening is, rather than me talking at you, is to interact with you. Richard has a tremendous amount of information in his head, and what I've learned in the past is it's quite difficult to extract that information out of him. So rather than just asking him to stand up and make a presentation, what we're going to do is we're actually going to ask him questions, and I'm going to ask him questions, but I also want you guys to ask him questions. And for those of you that are online, I can also see all your questions coming through and we can ask them. So whether it's Richard or Steve, we basically want to ask as many questions as we can. Before we get started, what I want to just do, just to show you how it actually works, basically, if you take it, for those of you that are online, basically you've got your blue screen here, and on the right-hand side, you've got the where you can basically raise your hand and you can ask questions. And for those of you that also battle to get online, what we are going to do, and I've just remembered to do it, is we'll phone through as well. Okay, excellent. So, Kristen, please can you just phone in as well so we don't have to hear this terrible music. Okay, so basically, without further ado, let's get started. What I'd like to do firstly is I just want to get an idea of everyone. What is it that you're looking for? We've asked a couple of people here in the crowd, but what is it you're looking out of tonight? Is it investment? Is it a rand hedge? Is it an insurance policy? Is it immigration? Or is it long-term investment as security? And I think what's important is let's give the guys that are online as well an opportunity to get involved. Can I see a show of hands? What is it, guys? What are you looking for basically? Who's here looking from an investment perspective? Yeah. Yeah. Rand hedge? No. Insurance policy? Immigration side? Yep. And a long-term view? Yeah. Okay, well, just we can see there the people have voted. I mean, if you look at the poll up on the screen, and for those of you that can see it there, we've got about 100% of people are looking from an investment perspective, quite a few looking at a rand hedge, 20% of the immigration, and 20% of the long-term investment. So if I just close that and I can show the results up for the guys on the screen. I think most importantly for us, if we look at it, if we basically run through it, tonight as a collective, there's a lot of people got a lot of different questions, and that's the whole purpose. So without further ado, let's crack on, and let's just make sure, hang on, I'm just going to close Google Earth here because it's causing havoc. Perfect. Okay, so let's get started. Richard, who are you? What is your experience with property? Why should people be listening to you with regards to Australian property? What's your experience?
Well, just to let you know who I am and who we work for at the moment, I work for a company called Ausinvest in Australia, and I've been with them for a number of years. My whole background's in construction and development, specifically brand new properties and high-rise and also house and land. And for the last couple of years, we've been helping investors in Australia mainly and offshore invest into Australia for a number of reasons that we're going to cover tonight. So basically, my background again, I am a qualified builder in Australia, and I've been qualified since I left school. And I was employed because of that experience as well to handle all the new properties that we do build, oversee all of it. Being the acquisition manager, I oversee a team of people that help me research and promote and offer the best properties that we can in Australia. And that's the properties that we offer our clients.
And I mean, just in terms of my experience, and I know some of the people here, what is a week in the life of Richard? Because a lot of airplanes and a lot of viewings of properties, basically.
Yeah, it's it's certainly not all glamorous, that's for sure, but it's basically arguing and fighting with developers and builders, trying to get the best possible prices, researching on the ground. We're driving around in these fringe areas, building sites, development sites, crashing cars into obstacles and building sites and all sorts of fun and games. But basically we're on the ground. I'm on the ground, my team's on the ground, and that's in different cities. Every day we probably see 5 or 6 or even more new developments come through for us to have a look at from major builders and developers in Australia. And it's up to us to really filter through those developments and see if they're worthwhile investment for people. And we have a strategy for doing that. And that includes being on the ground and having our people on the ground as well. So we're looking at all the fundamentals, of course, of what makes a good investment. But nothing's better than me being there and having a good look for myself and the team. And then whatever we do decide, we're going to back, and I'm sure we'll come into this about the 10-year lease back, but we back what we offer to our investors, and we've been doing it for 22 years quite successfully, and we're doing it for a lot of people overseas. And as you'll probably mention, and my director, Phil Kelly, likes to mention, we can do it for Australian soldiers in Afghanistan at the moment. We can do it for people here in South Africa quite easily, and we have done, have we not?
No, very much so. Steve, from your perspective, what do you guys do? What does network migration do? What is your expertise?
Okay, network migration is probably the largest immigration agency facilitation company, call us what you like, and we help and assist people with the immigration process overseas, not only in getting and ensuring that they get the right visas, but also with their relocation. We believe that immigration isn't just about a visa, obviously it's very important, but we also like to assist families in relocating, be it changing driving licenses, opening bank accounts, looking at temporary accommodation when they first arrive, and any number of things that you can probably think. We've probably assisted in the last 18 years about 8,000 families emigrate from South Africa, principally to Australia, but also to New Zealand and Canada. We have the only registered Canadian migration agency allowed to emigrate people to Canada on our books, and her name is Janice Chetland Palmer, and she works out of our Durban office. We've also got an office in London helping people from the UK, and South Africans in fact from the UK, who want to come back here either on their way to Australia or New Zealand or return to South Africa. So that's where we can, I think, assist people, and I'm happy to answer any questions tonight on the migration process.
I mean, we'll go into some of the advantages of investing prior to immigrating a little bit later. I mean, obviously, from your side, it's a pretty simple question. You live here in Bryanston, so a lot of people, won't ask a question. But a question we always get asked, and Richard definitely get asked, if it's so good in Australia, why are you here trying to flog properties to South Africans? And Richard, why are you here?
Well, firstly, we don't know what that word flog means. We see when it comes to cricket. But I just quickly wanted to say, Steve, if you're sending South Africans to Australia, can you send them rugby players first, please? Because we need some help, and some cricket players here as well. So, look, the reason we're here is purely by accident. Well, not by accident. We had a couple of South Africans working for us, like most Australian companies in in Australia, and they are they're from here. They're from Johannesburg, both the people that we have working there. And they suggested that we should have a look. And we also found that we were having a lot of people investing in through our company into Australian property by accident, just over the internet or by referral. I mean, as you're probably aware, there is a lot of South Africans living in Australia. So they're recommending people, our company in Australia, to over here. So they've got someone to check up on us for basically. So we just put it together and we had a look at the figures and we realised there is a lot of people here interested in investing in Australia. And having the people working for us, we just made the decision that we better come and have a look. And that's when we bumped into you, and you certainly put us through the ringer, making sure that we were who we said we were. And here we are today. We're here to certainly promote Australia and to promote the product that we've got.
I mean, I think one thing, and just for the record, Richard is actually a Kiwi, so he doesn't know how to blow his trumpet like Aussies. But I think one thing that's very important is that you've actually had your best year ever, or you're in the process of having your best year ever. Yeah. Which so just to back that up, it's not just foreigners buying into Australia; it's actually Australians buying Australian property in Australia.
Yeah, and look, it's important to note that at the moment, I can give you an example. There's an estate, and I discussed this with you in Melbourne, currently just on the fringes there, where we're looking for good investment properties. And it was only a few weeks ago where they had a camp out. And I don't believe you have camp outs here, but I'll just touch on it. We've had a situation there where they're advertising a new release stage in a new estate in this particular area. And because of the shortage and the demand in Australia, we actually had people, local people, Australians, camped out overnight on the estate to be the first in line to grab the #1 ballot, so that they had first selection of the block of land that's coming through. So this is Australia. This is what's happening here, happening in Australia at the moment. It's hard to get that message across sometimes, but it's there. It's in the media. This was on the news, and it's quite common. The demand is huge. So,
but I mean, outside of property, I mean, what is generally happening? I mean, we all sit here in South Africa, and it's quite difficult to know what's going on overseas. And,
yeah.
You know, what's happening in your backyard? You know, where's your wife shopping?
In the backyard, my wife's probably mowing the lawn. No, look, people are still spending in Australia. Things are happening. Look, I'm not going to downplay it. Look, we've had the global recession's had its effect. But, you know, our employment rate's only really just creeping up at the moment, a few percent. And look, without downplaying that, people are still spending money. People are buying property in Australia because it's a good investment, and it's been proven to do so. People are spending their money on LCD TVs. That people aren't afraid. The word on the street basically is, look, we're just getting on with it. What's this? I mean, maybe it's Australian ignorance. I don't know, but what is this global economic crisis that people are talking about? And I don't mean to downplay it, but it's, you know, people are getting on with their lives there. It's a good lifestyle in Australia, and probably most of you have been there. So yeah, look, people are just getting about their lives in general. There are a certain percentage of people that have lost jobs, and that's in those sort of difficult sectors like commodity sectors, the mining industry, that sort of thing. But you know, you look at the employment pages or the employment websites, and they're full of opportunities there. So some of the Australians are just a bit greedy, and they won't take the entry-level jobs, which is another complaint there. And we do have the skill shortage as well. So Scott, look, at things are positive in Australia.
Yeah, look, I mean, just as a man, I spoke to a good friend of mine who works for Investec Bank in Sydney, and I just asked him on Saturday, and he's an accountant, naturally conservative, and he actually said to me his exact words where he thought that the recession had possibly passed by Australia, which I found very interesting. And it's very much backs up what you said in terms of where the market is and what's happening.
Yeah.
So, I mean, in terms of your banking, you know, system, what is happening there in the banks? You know, because obviously there's quite a big fundamental difference there with other countries. You know, what's happening from a banking side?
Well, we're making a lot of money, put it that way. But no, look, we've got 4 of the most secure banks, of the 4 of the most, over 15 top banks in Australia as far as security goes.
15 top in the world.
15 top in the world, sorry. Look, probably similar to what's happening here. They're certainly tough in their lending criteria, but the demand's there. They're still lending money at a great rate of knots, but interest rates at the moment are stable. They're at one of the lowest points they've ever been at 5.2%. Yes, the prediction is they might creep up, but at the end of the day, I think they have to creep up. That's just the reality of it all. But yeah, look, again, they're lending money. They're not lending money on big projects at the moment because that's got to do with the economic downturn. It's more of a high risk. They're demanding more pre-sales on those high-rise projects. But generally speaking, yeah, they're going about their business nicely, charging lots of fees.
I think, I mean, just the one graph that I wanted to show was this one. And I don't know if you want to go through it or I can go through it myself. But I think the most important thing, just so that everyone's aware, is that basically what you got here is that in the US they've dropped the interest rates the most substantial out of anywhere else, and yet they've hardly passed it on to the man in the street at all. In the UK, once again, they've had huge drops, but they haven't passed it on to the man in the street. Whereas in Australia, they also had quite significant drops. They went from 8.75 to 3.25, but they passed it on to the man in the street. And I think that is something that's so important to understand, you know, in terms of what's actually happening. And just for the guys on the webinar, but just so that, you know, you understand the fundamental difference. And, you know, it brings me into my next question, you know, what is, from a property perspective, you know, what is happening in Australia, and how do you see it, and what's the difference between it in America and South Africa, for example?
Yeah, well, you probably answered the question as far as South Africa goes better than I will, but certainly I think most of us in the room know that America's got a fundamental oversupply of property. In Australia, it's the opposite. We've got a massive undersupply of property, which is getting a lot worse. And every year we need to get a large amount of new properties built just to keep up with the new population, or the booming population. And it's not happening because we've got that skills shortage, we've got that huge demand right across the country. And look, to be honest with you, everyone you talk to, developers, builders, everybody on the ground, they're busy, things are happening. They can't keep up, to be honest with you. And it's not as simple as getting more tradespeople. Where are you going to get them from? You take them from one company, then you've just created a hole in that company. So we're all forever chasing our tails there. So it's creating a lot of pressure. It's creating pressure everywhere. And supply, as I indicated before, having a camp out on an estate.
Here's some graphs for you.
Are you going to show me some graphs there?
Look at them on screen.
Yeah, so supply and demand is what's driving us at the moment. And you can see there, probably just on that graph that Scott's brought up, in the next, just going straight to Queensland there, for example, on average we need about 45,000. That figure's actually quite, that's an older figure now, but, and it says on the right hand of that column there, current stock deficiency is 46%. Basically what that's saying is that we are well under the rate where we should be to build properties. And probably the top three areas, as you've got there, New South Wales, or Sydney in particular, Melbourne and Brisbane, where the biggest or the greatest demand is. We've got a demand overall, but the greatest demand is in the major capital cities. So we're seeing it. 1,500 people a week approximately moving to Brisbane, same figure into Melbourne and of course into New South Wales or into Sydney. But the problem is there isn't places to move to. So we're trying to create as many new properties as we can in an environment where it's quite difficult at the moment. So
yeah, I mean, I think just to reiterate there, you know, they've built, or they've been building on average 153,000. Over the next 10 years, they need 182. This is across the whole country, which is a 32% deficit, difference between supply and demand. And that is one of the most important things of what he's actually trying to say from that supply and demand criteria. And I think as an investor, the long-term fundamentals, that's what's important as well. It's very important to take that into account. We missed one slide here because it jumped, but this was the population growth. And I think that immigration thing is very important to touch on, basically.
Yeah, well, basically, as you can see by the graph there, that figure is fairly accurate. But you've basically got about 300,000 people moving into Australia every year. And last year, the immigration was probably a bit higher than that. And you've also got the natural growth, birth, death. You've got that natural growth on top of that. So it's actually a bigger percentage of population that's coming in. And you can see by that spread there, as I was saying before, that New South Wales, Victoria and Queensland are getting the majority share of it all, and Western Australia or Perth to a certain degree. But you've got to remember, interstate migration plays a big effect in Australia at the moment. But as I say, Brisbane, Melbourne and Sydney are certainly seeing the biggest increase in population.
I think something else, just from everyone else's perspective, that's very, very important, is that immigration, they only allow 177,000 people. I think that's right.
115,000 this year.
Is it 115,000?
132. But it's also one of the reasons why they've changed their priority in allocating visas. And now the greatest priority is for the state migration, or a state in Australia, to sponsor an individual on a skilled migration process, whereas the general skilled migration at the moment is at a standstill.
But I think the key there, Steve, is that there's only two ways to get into Australia. You've either got money or you've got skills.
Absolutely.
And so as a country, it's just getting stronger and stronger and stronger in the medium to long term. From a fundamental perspective, the people that are coming in either have money or skills. Now that's going to affect the country, it's going to affect the economy, it's going to affect the property market, and unfortunately it's going to affect the cricket and rugby team as well, because it's going to get stronger, basically. So, I think that's quite a key thing to take into account.
A lot of companies were sponsoring people in. Now, probably with the exception maybe of nurses, trying to get a relocation package now is much more difficult than it was 18 months ago, where a company would pay you to come across.
Yeah.
And those visas, those 457 visas, again, the migration or immigration department have made them slightly more difficult to get, insofar as they want to see people's skills, even on what is basically a work.
Yeah, no, spot on. And I think, to answer the question that, in terms of what you said, what's happening between Australia, the US, and South Africa. I think the big difference between the US and South Africa, for example, is that we've still got a lot of demand here, but the banks, the guys are really battling to get access to finance. There's guys in the room here that's what they do. And because of it, what's actually happened in South Africa is that the banks haven't lent, and we didn't drop our interest rates quick enough. And so what happened then is that the property values started to go down. The banks got nervous. They then dropped their loan to values, and it actually creates a downward spiral. Whereas in Australia, they did completely the opposite. They dropped their interest rates very quickly. They also brought in a first-time homeowners allowance. And so what happened is that shored up the market. So they didn't have any drop in the property markets. The banks didn't get nervous. The banks didn't drop their loan to values. And it's a completely opposite cycle. Even though both countries have a region or an area where demand is outstripping supply, it's just interesting looking at how the two markets have handled it. And I mean, there's quite a few reports here that I've actually got, which I'm just interested to see what your thoughts are on it. But I mean, for example, this one report here said that they're actually now at 17-month highs in terms of new housing loans, and they're at a 7-year high in terms of first-time homeowners grants buying in terms of construction and that sort of thing. So it's actually quite significant what's happening. 27% of buyers at the moment are first-time homeowners, buying in the market. Now, anyone that understands property will understand how important first-time homeowners are to creating the entire property market. They talk about it all the time in the UK and how important it is, I mean, from your side, Richard, the one thing I wanted to ask is that it actually says here, in terms of the US, nearly 30% of US homeowners have a mortgage worth more than the value of their home, and Deutsche Bank expects that to rise to almost 50% by the end of 2011. Now, I mean, from your perspective, it goes on and it says in this article that Australia is completely different, and it says that they haven't had a huge construction boom, and that borrowers haven't leveraged themselves to the hilt like they have in America. What is your outlook over the next 2 to 5 years from an Australian property perspective?
Oh, look, again, the fundamentals are in place there. You've got a massive shortage of properties and a big demand for properties. That's not going to go away overnight. I mean, no matter what anybody says, that's the main driver, and that's going to continue to push us through. There's no rocket science to it. When you have a demand and you have a massive shortage, that equals good growth, and I can see nothing but growth. Everyone's talking about good growth. As far as investing into property there, investors are coming back into the market there currently. They're going to start taking over from the first homeowners who are actually sucking up the new supply of housing that we've got there. They're just sitting back waiting, a lot of people, but now's the time. As you touched on, the first homeowners grant's coming to an end, so they're going to phase that out. But that's when investors will take over. I mean, we're all aware of it. And investors are looking at us from all parts of the world at the moment, the UK and South Africa here, of course, so and locally as well. So I see nothing but growth. That demand and supply is going to remain.
I mean, something that there's an article here, will rising interest rates hurt the property boom? Very interesting they use the word property boom. It's quite difficult to contemplate that when we sit here in this current market. But
it must be one of the only countries using that terminology.
Yeah, but it's interesting, they basically, it's very interesting to read. The Australian Governor, Glenn Stevens, said that they were expecting it to go up, but he said that extraordinary measures were taken, but when the emergency has passed, you can think that we will be withdrawing these emergency measures. And he basically believes that they'll be looking in the region of around 5 to 6%, in terms of where the market is. Now, in terms of the just to show people, and if you wouldn't mind just taking us through the interest rates, because I'd be very interested to see what your thoughts were as an Australian and what it was like when they went up for 7 years.
Oh, look, I think, again, I'll keep going back to that supply and demand, because people still need a house even when interest rates are rising. And you'll find actually that people were still buying in that period. Of course, when the interest rates started rocketing down, people were starting to think about buying again. And that was what was happening. At the time, people just couldn't believe it. It was like the lottery. Another month would pass and the interest rates would drop again, and the banks would pass it on. So it was exciting times. And look, what it did was it didn't actually do anything that wasn't happening already. Again, I go back to the supply and demand. Someone that sees it all the time, I'm talking to the developers and the builders, people still need somewhere to live. They need somewhere to rent, and a lot of Australians do rent. There's a high percentage of them renting. And we needed, as a construction entity, to create more properties. And we still haven't caught up, and we're not going to. That's the bottom line. So yes, interest rates certainly take effect when they were going up. People tighten their belts. But even at 7.25% living in Australia, it's an affordability. That's where it'll end up again, somewhere around 8 or 9%. That's where everyone's predicting. But that's
8 or 9 for the man in the street.
For the man in the street. Sorry, you're looking at.
I mean, the way they work in Australia is that between 5 and 6 will be the base rate, and then you can pretty much add 2% generally to that.
That's quite normal for us. We're used to being around that. We're certainly not used to your interest rates here. That type of fluctuation, that'd be fair to say. But, like I said, yes, having the interest rates drop like they did certainly brought a lot more people, as you said, mainly first homeowners, into the market. And, of course, again, away we went, another boom when people, all the developers, and most of them will tell you that a lot of their developments, actually 50% of it was sold to first homeowners.
Yeah.
They're the sort of people that were phoning in, sending emails, and we want property, And that's the market that they were building properties to. So, to be honest with you, on the ground, we didn't see much change. This demand, and it was still there.
I mean, just so that people are aware of this interest rate, in December 2001, interest rates were here, and until September 2008, they went up. So for 7 years in a row. I mean, we all know what impact it had in South Africa just for 2 years. Yeah. Then, quite dramatically, they thought it was going to stop at 7.25. It didn't. It kept going to 8.25. And then in the space of 4 months, it went from 8.25 to 3.25, which is a 64% drop. So basically from October last year to February this year was how quickly they dropped. And that's really where, that's what has happened so dramatically. So with interest rates, that's why they expect them to effectively turn and go up. But again, you read reports and it's very mixed. There's one economist here that says that the governor will raise it by 2%, but it's going to only happen over the next 2 years. And that by June 2010, there'll only be 25 to 50 basis points. So, it depends on what different people have to say as to where it's going, basically. Right, in terms of what I would like to do is get a bit of crowd participation. You've heard a hell of a lot in terms of what's happening with regards to the property market. If I was to say to you there's great opportunity tonight, and based on everything you've heard, would you do it tonight? And if not, why not? You can't get it wrong. What would be, I would like to just take down. What would be some of the reasons? What would be some of the fears or concerns, or what would you want to know, or what would be those reasons?
Okay, if you had to ask me, I'd say yes.
Yeah.
Definitely possible.
Okay.
But yes, there would be a couple of questions I'd ask.
Okay.
And one of the questions was, I wrote here is, if I should immigrate to Australia, and I'm living there now, and I need to buy a house, as a first-time buyer, or a first-time homeowner, will I qualify as an immigrant for that subsidy?
Yes, if it's your first home, principal place of residence. Yeah. Even if you bought an investment property now, which a lot of people do, with the intention to immigrate into Australia in a few years' time, it's an investment property. It's not a place that you live in. It's not your principal place of residence. That's what you call it here.
Correct. Yeah. Yep.
So when you eventually do move to Australia, and if the first homeowners grant is still going, of course, and it's been going on and off for quite some time, so I'd imagine they'll phase it in, phase it out, or reduce it. We don't really know, but the talk is that they're going to phase it out at the moment. But when you do arrive there, and whatever grant is available at the time, yes, you'll be entitled to it once you...
Okay, the reason why I'm asking...
A permanent residence.
Have to be going in on a permanent
residence.
visa. Whilst you were a temporary resident, you wouldn't qualify.
Permanent residence.
Okay, now, if I'm not a permanent resident, would I be able to purchase property?
Yes, you can. People doing it now. We've had a number of Scots clients doing it with people from the UK.
Buying it as a non-resident.
Buying as a non-resident. An investment property. Yes.
I mean, I think the intention behind the question was that people have fears. At the basic level, what are those fears? I mean, let me give you an example. I've been doing this a long time. I've been helping people invest internationally for over 6 years, and I mean, these are some of the sort of questions that people bring when I chat to them. So if I just take you through them, it's I want to go to Australia to choose the right investment first. I'm worried about management and maintenance of my investment property. It's so far away. Who's going to actually do it? What happens if the tenant doesn't pay the rent? How can I afford my mortgage? What happens if interest rates go up? Just as an example. Now, what I'm going to do is I'm going to turn those questions all straight back at Richard. I'm going to say, well, okay, Richard, all these gentlemen and ladies want to go over to Australia. Why should they not wait till they go to Australia until they choose the right investment?
Reasonably simple answer to that first one. Can you bring up the graph that shows the growth of projection in the next few years, and we'll just discuss that. But basically, if you know a date of when you're going to arrive in Australia, great. But look at this article came out here just recently. Over the next 3 years, just about every capital city in Australia, major city, is going to have that sort of percentage growth. So if you wait 3 years, you're going to miss out on that growth. To me, that's why investors are coming back in at great rate of knots at the moment with that supply and demand fundamental behind it. Now's the time to do it. Why wait 3 years? It doesn't make sense to me. So even for Australians, everyone's talking about it now. Now's the time. We've got to move. This is it. Interest rates are at its lowest. Yeah, absolutely. We all want to have a look. But at the end of the day, a good investment property is not going to be the home that you're going to live in. At the end of the day, it's an investment property in the right growth areas.
I think just to reiterate on that question, if I had a friend coming from Sydney to Johannesburg and he was going to stay in Sandton for a week, what would be the chances of finding a good investment? Understanding the dynamics, the population, and everything. And from that point of view, can you just give me a little bit of an idea of your strategy, your 100-point system that you use? Because I think what I'm trying to get across is that, no matter how long you go to Australia, you can go there for 3 months. You're not going to have the same knowledge in terms of looking for the investments that you do, and that's what I really wanted to get across, in terms of that knowledge and that investigation.
Yeah, sure. I mean, you touched on it. We have a criteria that our team looks at, basically, which will let somebody know what is a good investment property as far as Ausinvest is concerned and the clients are concerned, and that's what we call a 100-point criteria. And look, without going right into the detail, we look for population growth, infrastructure, the supply and the demand again in the area. So, and that's what we look at. We have a system that's got to have all the boxes ticked. And basically, like you said, if I came over to Johannesburg, as I do, to buy an investment property, I couldn't possibly do it in a week or two. I would need a long period of time to decide. But I would be looking at the numbers, and that's what our offshore investors do, our local investors do as well. They look at all the fundamentals behind it, and particularly the cash flows.
Okay. I mean, the next major question, as I said to you, that people ask is, I'm a long way away. What happens with regards to the maintenance? My tap leaks. What do I do about it?
Yeah, well, again, Ausinvest, we are property managers as well. Anybody that purchases an investment property through Ausinvest, through IPS, of course, basically, we are working for you. We have property managers in major cities that look after all the investments. Without going into the details of it, Scott, we actually look after that investment property on your behalf. Sorry, there's a hand raised there.
If you don't have a permanent living in do you
You have to be in there.
It's also only for a home. But the beauty is, if you buy an investment property now and you were to move there in 2 years' time, you would still get the first-time homeowners allowance when you buy your home. So you don't lose it, if you see what I mean. Okay.
So just in line with the investment property, if I understand that there's quite a high deposit that gets put down as a first-time buyer, coming over as an immigrant.
Yeah.
Okay. I think 30% or something. 30%. Okay. Now we invest in this property and we do get over and work takes us elsewhere. How's resale value?
Yeah, no, good question.
I don't want to buy a property in Brisbane, but I have to be looking at it.
Yeah, but at the same time, an investment property is different from your principal place of residence. Investors are looking at the numbers and where's going to be the best growth. If you got to Brisbane, which you probably do, again, that's a massive city. It's very hard, again, to work out where you would live. I mean, you're not going to necessarily live near your investment property, are you? And again, just to answer your question, because all investors ask the same thing, the resale is there. There's no doubt about it, because they're in high-growth areas. They're in demand areas where people want to live.
But I think here as well is that you don't necessarily have to sell. You can, once you're living in Australia, you can remortgage to 90%. So you can release 20%, which you can actually put down on buying a home in Adelaide, as you mentioned. Do you know what I mean? And the beauty is then is that you've now got an investment property, you've got a home, and the way that the tax system works in Australia is that you can, even if you've got a negative cash flow here, you can offset it against your income. That's why a lot of Australians buy investment property, because it's tax friendly. So it actually, in many ways, I would say don't sell the property, keep renting it out. And it brings me on to my next question, which is, what is so attractive about Ausinvest? Because whether you're living in Adelaide or in Johannesburg, people are nervous of, what happens if my property doesn't rent? What happens if I don't have income? And this for me was the most exciting thing. I've been in the international game a long time, and when I met Richard and understood it, the most exciting thing I've ever seen in an international property. Very, very simple, and yet provides such a good solution.
Yeah, look, it is simple, and we basically came up with this concept 11 years ago, and it was come about from those sort of questions. What happens to my investment property? Who's going to look after it? What happens if I don't have any tenants? And this came from Australian investors. So we decided at the time that the best thing we could possibly come up to counteract that was to start what we call the 10-year leaseback. And to keep it simple for you, Ausinvest become your tenant as a property investor. Not the man on the street or the couple in the street, so to speak. Ausinvest, the company, does. Very simple process. We charge a small fee on top of your normal property management fees here, and we're talking weekly terms. It's $15 a week for the first investment property. And what that does is you get enough investors, Australia-wide or overseas, adding $15 into a fund or a trust, if you like, that Ausinvest manage. You get enough investors doing that. That covers shortfall. So if we had a few thousand investors in our leaseback paying $15 a week, you can imagine it becomes a good sum of money to cover it. And we're very open about it because it's a simple concept. It had a lot of risks for us as a company when we were starting off trying to get enough properties involved in it. So we want properties. We want investment properties to look after. We're geared up to do that. The more that we've got in it, it becomes a profitable part of our business. And I haven't met an investor yet who's not positive about that. So what it does is we become your tenant. We're basically like a sublease agreement, if you like. We become your tenant. And then us as property managers, we at Ausinvest will go and it's up to us to find the tenant to pay us, basically. And all that that rent gets passed on to you. That's minus the lease back. So it's like an insurance policy. Not an insurance policy, but it's like an insurance policy. And it's been running for 11 years very successfully. And we have people from all over the world who have properties through Ausinvest because of that. And we're the only company that offers a 10-year lease back.
I think the one thing, just to speak personally, sorry, just to finish off, was hit me like a sledgehammer. Because, we've been helping guys invest for a long time, and what often happens is you've got the developer and you've got a management agent, and the developer will try and tell you what rental you'll get and everything else. But what hit me like a sledgehammer is the safety net. Because never before have I met a company that will actually put their money where their mouth is. So they say, right, you're going to buy this property for $400,000, and your rent will be $400 a week, and you actually sign a lease with them prior to buying the property. Now, whether there's a tenant or not is not your problem. They are your tenants. You've already got a contract with them, and they pay your rent. Now, you need to understand how important that is and the amount of work and the amount of pressure on Richard's shoulders to make sure that he's helping you invest in the right areas where there is tenant demand. Because from day one, if there's no tenants, they start losing money. And it's an important mindset.
Well, what happens if you get a tenant who actually pays more than the lease agreement that Ausinvest signed?
Well, that gets passed on to the landlord. I mean, we don't keep that. That's passed on to you. People sign.
So it provides you with a floor, but not a ceiling.
So you use spots straight up?
Yeah, absolutely. Of course we do. It would be illegal not to.
Less the $15.
Yeah, less the $15.
So that cover full maintenance cost as well. So if it's not like a property, that comes from you.
Look, if it's being a brand new property, most items in a house are under warranty. So in Australia, warranties get looked after. I'm not so sure what it's like here with what everyone seems to have a grin on their face. But basically, that's for a period of time. Now, once that period of time lapses, of course, the property is obviously aged and obviously increased in value. Then if it was a hot water system, or this one always makes me laugh, a geyser hot water system here, which I still think is an old man, but anyway, if that broke down in 6 years' time, then yes, look, it's outside of the warranty, or if the warranty was 6 years, say it was the 7th year, if it was outside the warranty, look, we would come to you and say, listen, the house is untenable at the moment, the geyser's not working, and it's going to be X amount of dollars to fix it. And we're going to get 3 quotes for you. We do this all over the internet. We have a local plumber or maintenance person that does that for you. Oh, absolutely, yeah, because otherwise we'll have a property that we're trying to find tenants for, and that's going to cost us money, because you still get paid. It's going to cost us money if we can't tenant that property because it doesn't have a working hot water system. Geyser.
Yep.
What about capital gains on investments of property?
Yeah, you certainly pay. Yeah, when you sell it. Yeah.
When you sell?
Yep.
What is the percentage of capital gains?
They basically, okay, you know how we work on a sliding scale, 25% and then 40% of 25, so the worst ask could be is 10%. There's a sliding scale of 50%. The 50% of it's taken as capital gains, and then it's on their sliding scale tax rate. So basically, worst case scenario, you're looking at around a 20% capital gains.
Is that on principal property or on?
Oh, well, we're primarily talking about investment properties, so you know what I mean, investment property. But I think, from a tax perspective, one needs to get into quite a lot of detail with tax because, like in South Africa, if my rent is 6,000 Rand a month and my costs are 10,000 Rand a month, that 4,000 Rand a month, I'd lose it. There's nothing I can do. In Australia, I can accumulate that loss. I can also depreciate on the construction. I can depreciate on the furniture and fittings. I can take an inspection trip over there once a year. So I can accumulate on a $400,000 property, even if it's cash flow positive, I can accumulate generally about $15,000 a year. Now, if I go and sell that in 5 years' time, I've got myself, $60,000, $75,000 that I now take off against the capital gains tax, which is important. Yep.
Probably insurances. Typically in South Africa, you have insurance against things like a hot water system. Probably actually you take the seams out of the floor, carpets and everything.
Yep.
Your fee, does that include a collective?
No, insurances are separate because we're not an insurance company, of course, so we have to have a proper insurance.
Do you have an insurance company that comes to you and says, well, you're an investment company that has 1,000 homes.
Correct.
We'd like to do insurance for you.
Yes.
Anyone who comes into your pool gets a preferential rate.
Correct.
Or do you do it on your own?
Yeah, no, you're absolutely right. Yeah, obviously we've got so many properties there, and insurance companies take notice of these things, and we will make sure the insurance policy is right for us, for the clients, for everyone, which covers all those issues that you mentioned. And that's also, again, calculated with the cash flow, so because we understand that you can't keep paying for these items living here, from a South African point of view. So when Scott shows you the cash flows of it all, you'll see how it's all calculated. But to answer your question, yes, insurances are all up to date.
I mean, I think the key is, and as Richard said, is that when we sit down and go through and understand what it is you're looking for and you go through different properties, we've got a full cash flow that takes every expense into account. I don't like surprises, you don't like surprises, so it's got everything there, what you can expect, right down to insurance, landlord protection insurance, which is specific insurance that they recommend in Australia, that if you've got any problems with tenants, that just, it's all covered basically in terms of what you're looking for. I mean, I think just one thing just to reiterate on that 10-year lease back, is that the thing I like most about Ozinvest when I first met them, the business was set up to help Army people, Army, Navy, what do you call it? Air Force, Armed Services, buy property. So whether they were sitting on a boat in the Mediterranean, they also want to buy property back home. And the thing that I like most is that International Property Solutions, our business, has been helping people invest internationally for a long time. Ozinvest had the same mentality. The person was a long way away. They needed to help them right through the transaction, help them with the management and the maintenance, and that's why we partnered with them because it's the same, methodology. Whether you're sitting in the Mediterranean or sitting in Johannesburg, you've still got the same problems, and it was quite important. Yep.
No problem. Yeah.
No, there's no
breakthroughs or anything. Simply an email. Because look, we understand things change. You might just want to sell and think, oh, I've made all this money. I don't know, which is not what we suggest you do. But yeah, you just simply send us an email, or if you're moving, or the worst scenario happens, husbands and wives break up, and you need to sell. That's what I'm saying. That's it. You just simply send us an email.
I mean, I think the key there is that even after 10 years, they still actually want extended. This is not a Dubai situation where the developer was charging $100 and then gave you a rental guarantee, so they actually charged you $110 and gave you your money back over 2 years. because they're making money in the process. You're getting the protection you want. It's a win-win situation. What actually happens, the only reason they say 10 years is A, because people can't see beyond 10 years, and B, because inflation goes up. So what will happen after 10 years, they'll get back to you and say, do you want to do another 10 years, but it might be $20. You know what I mean? So that, that's pretty important. It's in its 11th year, so I think everyone's just scratching their head going, well, what do we do now? We just roll it over. Because remember, it's in our best interest to have as many properties in the lease back as we can. So we want to encourage people to be in it. Absolutely.
Is there a percentage of the number that you've got that might be unoccupied at any one time?
Yeah, at the moment it's 0.7% Australia-wide, so we've got it right. And that's just basically most properties are in changeover. So,
I mean, Steve, to give you exact numbers, I've been to their office 3 times.
Last time we all
It's
met.
like 4 to 7 properties at any one time
So
out of
it's
1,000 properties.
That's because I think, if I might say, they're very careful about where they select these properties and where they buy.
So to invest, what is your base on? Where do you start?
Yeah, well, obviously entry point is relative to each city, and that's something Scott can probably take you through as well, because we've got a number of large amount of properties that we're always looking at and offering to clients, and that's changing all the time. So it should. They are demand properties. If they're sitting there, then they wouldn't be the best investment. So that's something Scott can take you through, because that would literally change now. Because what time is it in Australia? Oh, maybe not, but there are entry points. And that depends on the market price for a particular city. So
to give you a baseline, though, you're looking at probably entry level being around $300,000. And I think the key there is that they only focus on 3 and 4 bedroom homes. 75% of Australians want to live in a house, just like we do, with a house with a garden and that. And that's what they focus on, because they have far better rentals out of them than they do out of apartments, etc. And the entry level you're looking at, depending on the area, as Richard said, is pretty much that. So, in terms of the calculations, Okay. I mean, just in terms of, from a property perspective, Steve, what are some of the advantages of investing if one was thinking of going, say, in 3 years or so?
What are the advantages of doing it now?
Yeah, well, I mean, even from an immigration perspective, does it assist with immigration, in terms of what one's looking at?
No, it certainly does. I mean, certainly from a tax perspective, overseas as well, from the benefit of having a credit rating with an Australian bank if you own property over there and have a, and there are a number of other good and valid reasons why one person might want to invest there. Philip would probably be another person that people could contact.
Yeah, I mean, I think the key is what we spoke about earlier, is that an investment property can actually help you buy a home. And I mean, I've moved lots of times. There's a gentleman in the room who's moved more than me. What's it, 5 countries or something? But I always say, it doesn't matter whether all your uncles and aunties live in Brisbane. Brisbane's a flipping big place. If you don't want to try and buy a house now, because if you end up north of the river and your job's south of the river, it's bloody difficult. So, to answer your question in terms of where, for me, it's actually doing the research to find out where you're going to get the best return on investment. And then ultimately, when you move there, rent for at least 12 months and find out where you want to live. And when you want to buy that home, your investment property will help you buy that home. And I think that's really, really key. And one of the reasons one wants to look at it prior. I mean, Richard, from your side, I mean, what are some of the opportunities? Obviously, lots going on, lots happening. What is happening? Where are the latest opportunities? What is it that you're finding at the moment?
Look, apart from our what's the best way to put this? Apart from our big successes in Melbourne and Brisbane, which we still have, big cities, big demand, we're pretty excited to say that tonight we've finally got them ready. We've just got them ready yesterday. We've got some opportunities in Sydney, in some great growth areas in Sydney. If anybody's been following the Australian market, you all know that Sydney is very difficult to secure property in and hold it for a certain period of time. So we've got that, and even I'm not even releasing that to our own Australian agents, simply because Scott's been hammering me for the last 6 months to get something into Sydney. We had this disagreement that Sydney wasn't quite ready from our perspective.
I don't know if any of you saw the graphs as to what's happening in Sydney, but anyway.
Yeah, but fortunately we're on the ground in Sydney. So, but now look, we agree with you. So, but we do have an exciting opportunity now. We really have only brought a certain amount of property here because there isn't abundance of property available, good property. So we've got those opportunities here, which Scott certainly can show you all the information on. On top of that as well, we're excited about Adelaide. Adelaide's a lower price point again, but Adelaide's got a great story behind it. There's some good movement in certain areas of Adelaide, and some exciting projects have been given the go-ahead. So there's going to be some more population movement.
Mining projects.
Yeah, mining projects as well. So it's not all doom and gloom and commodities there. So we can see a lot of movement in these areas at the moment, and the demand is really starting to pick up. So again, it's a good price point in places like Adelaide. Good story. And so on top of those two, we've got some really exciting opportunities inside of Brisbane and Melbourne as well. So
sorry, Richard, you're saying it took you 6 months to find land?
No, it didn't take us 6 months. We just had other areas that we were offering to people saying this is a good investment. Okay. And we're looking at Sydney, waiting for the right moment to really start getting back into it and saying, look, these are the right areas. Because 6 months ago we still had other areas which are in greater demand. I mean, we're talking about, again, places that had campouts. So, I mean, there's a huge demand there. So that's what we're offering at the time.
George is online here, and he said agents and odds stated that growth in value in homes and developments such as those under discussion lag that of new developments in the heart of population centres, e.g. Robina, Queensland. Correct. Is this significant? I mean, what's your response? I mean, from your investment strategy, what is this that you're looking at?
Yeah, well, Robina's been a huge growth area. That, if anybody, and I'm sure this gentleman knows, is it George? Sorry.
George, yeah.
George would know that, probably knows a number of South Africans invested in Robina especially, and they picked up a lot of growth. And Robina's just basically right on the Gold Coast outside of Surfers, and it's like a city, a city that they created because there's a huge demand there. But Robina's had its time. Robina's reached a ceiling at this point in time, and the prices reflect that. And so do the vacancy rate there. If you have a look around, there's a lot of particularly apartments that are very hard to get good tenants for. So, and there's no land in Robina, as you're probably aware. So we're not looking at those sort of opportunities. We're looking at what's next, not what's happened. So if that can, hopefully that answers your question.
Yeah, but I mean, in terms of what's happened, or in terms of what you think's going to happen, what is it that you aim for? What is your investment strategy? You mentioned the periphery of the cities, but why that? Basically?
Yeah, because that's where the population. And again, I'll get this word right, because apparently the word affordability you've got to be careful with here.
Affordable housing.
Right. Okay. It's an affordability for people to purchase a property, to maintain that property, and also that again affordability for people renting that property. And I use this example: you could buy a $600,000 apartment in Robina. You're not necessarily going to get $600 in weekly terms in Australia. You might get a lot less, so your yield is a lot less. Whereas if you're in those sort of affordable, words really thrown me since I've been here, affordable areas, fringe areas where there's lots of growth, lots of demand, new shopping centres, new infrastructure coming in, the yield is a lot more favourable. So it's normally $1 per thousand in those areas. So, Robina, I don't think you do any wrong. You hold on to it. You'll have to hold on to that probably for a long period of time to wait for the natural growth to catch up for it. But that's not where the growth is at the moment.
I mean, I think the interesting thing, just so that everyone's aware, and certainly I learned from my trips over to Australia, is that the average man in the street earns between $45,000 to $65,000. So a household will earn roughly around $100,000. So if it's a single-family income, that they can generally borrow up to about 6 times their income. So that basically puts them at around $300,000. And the top bracket is around $600,000. And once you start taking off credit cards and car finance and all that, it often drops below $500,000. Now that's for buying a property, but it's also for renting. The renting bracket tends to be between $300,000 and $500,000. It's what you said in Robina. You can spend $600,000 or $700,000, but you still only get $500 a week.
Yeah,
which is very, very important in terms of which bracket you're looking at. And something which I'm not sure you're aware of, 85% of Australians are in the middle class. So what I've just explained to you is 85% of the population. And that is fundamental to understand when one's looking at investment and where you're looking at. Yep.
Just listening to your conversation with the repurposing of the East Coast side, as a matter of interest, a couple of years back we did a trip on both sides, and in particular I tend to look at reading a lot of the property magazines that you had. There was a really high growth rate on the Western Australian
Look, that's a really good question, actually, especially from there's a lot of South Africans in Perth. So
Just so the guys online heard it, I mean,
Yeah.
basically it's the difference between Perth and the East Coast.
Yeah.
You know what I mean? In terms of
well, firstly, Perth is the only capital city in Australia to show negative growth for the last 2 years. So I think we wouldn't be doing our role as property investment people if we were suggesting that you buy into Perth. I mean, that's quite a simple one, really. Now, we were right there with you a number of years ago saying Perth is brilliant. Invest in Perth. We secured the right properties. We manage properties in Perth. But right now, there's nothing wrong with Perth. But you are correct. It is heavily commodity driven, and that has been affected in Australia, of course. So people leave those areas and they go to other capital cities where there's more opportunities. It's a logical thing. So they're going to places like Brisbane, Melbourne and Sydney to be closer to the cities. But nothing wrong with Perth, but it's just not offering a better investment opportunity than any of those other opportunities.
I mean, I think just to back that up with stats, 2005, 2006, 2007, Perth was the fastest growing market in Australia. It's now the second most expensive city outside of Sydney. And that's in everything. I mean, I recently was there, and it costs $8 for a beer in Perth, and it costs $6 for a beer in Brisbane. It's ridiculous. So I just, it's more expensive at a lot of levels basically, and that's the reason that the property market's gone up and it's gone down. And I actually believe it could lose anywhere up to 12%.
Oh, look, I think
in the Perth market.
Perth will come back, but it's going to be quite a bit of time before it comes back. Yeah, there's nothing wrong with it. If you have a property now there, or somebody doesn't have a property, it's not where the growth is going to be that we can see. Yeah, look, no doubt. There's absolutely no doubt in my mind that properties will double again, and Perth will be the same, but just not in the short term. That's not better than what else is.
And the migration process sort of mimics that as well, because we're finding now we're getting a lot more people looking outside of Perth. South Africans historically were drawn to Perth for whatever, I think it's 22,000 South Africans, 21,000 South Africans live in Perth. But we're finding now that they're going much further afield. Brisbane, I would say, is probably the next most popular. But also, because of the prioritisation that migration's taken now in the last 6-7 months, each state is sponsoring its own different workforce, okay, as a priority. And South Australia, it's one of the biggest growing states at the moment, and encouraging migrant workers probably more than any other. So we've seen that change as well, as people understand.
Guys, there'll be plenty of time for questions. I just, for the guys online, we need to wrap it up because we're nearly up to an hour. But I just wanted to show you something. When Richard was with me in Sydney in March, actually, this was an article that I got from the Sydney Morning Herald, which, for those of you who can see, it says housing boom, which I was absolutely flabbergasted because in March, it seems like a long time ago, but the world was falling to pieces. You only had to watch BBC to want to jump off the balcony. Now, I read this article, and ironically, it's everything that you've been saying. It's Western Sydney, it's affordable homes, and that's just where this boom was in the affordable sector. And, after reading this was really where I started to really give, some of the gears to Richard and say, come on, we've got Brisbane, we've got Melbourne, that's fantastic, but, even the newspapers are saying Sydney. And that's where he's gone out and, some of these opportunities talking about that, they're in Western Sydney, they're in that affordable bracket. It's where the rental demand is, it's where the young first-time homeowners are, it's where the tenants are. And, I would ask you, I've been waiting for 6 months for this. What do I do next now? If you said to me it would come and it's taken a while, but it's finally here. I mean, what are the next steps basically?
The process, and again, it's difficult to get if it's not there, if you know what I mean. So it's taken that process to get it in the right areas and to get the right. And we're very happy with what we've put together. Our staff in Australia are unhappy that I've kept it all to you at this point in time. So really, it comes back to you. The process is quite simple. Have a look through what we put together for Scott and the opportunities that are there. And I'm sure Scott's got all the information that you need at the moment. But most certainly, the process is simple. Can I just make one comment? On the back of that paper, there's also something about Phil's century stuns the Proteas. There's a bit of good cricket news there for Australia.
We run to rugby now. Anyway. But I think just so that everyone's aware, and I've got the next steps there, please do me a favour and fill in the feedback forms. As I said to you tonight, was a first in terms of interviewing and trying to get the information out of the guys. Yeah, no, I'll get on to them. And so, let us know. Well, how could we do it? What have we done wrong? How can we improve? We've still got time for questions. We would highly recommend setting up a meeting. Myself and my team, we really understand the Australian property market. Richard is here till Sunday, so if you want to sit with us until Sunday, we can do it. And obviously Steve is based in Bryanston, so like myself is here on a permanent basis. And then we can pretty much take you through the process, choosing a property, arranging the finance, helping you with the exchange control approval, and then managing the whole process. Kristen is standing in the corner, very, very capable in terms of understanding the process and helping you right the way through. FIRB is the Foreign Investment Review Board, all the type of applications, and we'll help you right through that, right through to the management. And when I say we, it's a collective partnership between IPS and Ausinvest. So, I think it's pretty important with regards to that. I've just got a quick question here, Richard. Let's just see what this gentleman's got to say. This is Kanya. He says, Richard, what do you think of the prospects in Hobart since the lifestyle looks good but has a low population?
Yeah, I think you just about answered that. The lifestyle's great, don't get me wrong. Hobart's a beautiful place. It really is. The problem is there's just no major population growth, and in the foreseeable future, I can't see what's going to drive it to make us change our mind. There's no major growth. There's a steady growth, but again, why would we recommend Hobart if there was a better investment at the same price point in another major capital city? So nothing wrong with Hobart as a city, except it is remote. But no, from an investment point of view, there are better options. So to answer your question, yeah, you probably answered it inside your question.
Okay. I'm just hiding these questions here. Just so that everyone, we're going to go to question time now for everyone. But just if anyone is interested, we've got all the information on ipsinvest.com. That's our telephone number. For those of you that have found us, you probably know it. But for those of you online, 011-463-0588. Or if you can't remember that, 0800 Offshore is probably a little bit easier to remember. And then I would also recommend going and signing up for Twitter. A lot of people don't know what Twitter is. A lot of people think that I'm going to tell you what I ate for breakfast. I really am not interested in that. But we can give you great up-to-date information. We're constantly putting stuff on the blog, ipsinvest.blogspot.com. And there, constantly Richard sending me information. Between all of us, we're constantly finding information. So you don't have to spend your life looking for information. We bring it all together in one spot. And as a bit of a bribe, if you go to the website, there's an opportunity to win 2 tickets to the World Cup final next year. So, yeah. So, but yeah, what I'd like to do is just open up the floor to questions. Obviously, we've got the questions coming through from the guys online. Is there anything we haven't answered for the people here in the audience? Anything that I can answer, with regards to?
Scott,
yep.
Do you look at all at second-hand properties to invest in second-hand
No, that's a good question. No, we don't, because generally those second-hand properties in Australia don't provide the tax incentives as much as a brand new property. Now, for offshore investors as well, Scott touched on the FIRB. It is a requirement that the property does have to be brand new if you're a non-resident as well. So, no, we don't. Other reasons would be tenants prefer to rent something brand new, low maintenance, all those sort of things. Warranties, absolutely.
I think it's like, just to say, you can buy land, a house, or an apartment, but it has to be new from a developer. And the reason they did it, just so you understand, is that basically they want to keep the construction industry going, which is an important part of the business. I hope that South Africa, if they do bring on regulations, do something similar rather than just making it categorical.
It stimulates the economy.
Well, exactly, yeah.
You're doing something brand new. Obviously, you're employing people. You're employing builders and carpenters and electricians, whereas you buy a second-hand property. You just bought a second-hand property. You've done nothing for the Australian economy. So it's quite a good system, right? The reasons behind it anyway. So.
And just, is there anything else, guys? Anything else? Any other questions that...
Probably a difficult question to answer, but on average in the current environment, what is the typical deposit required where the mortgage will be for the rent?
70%.
It's a tough one. What's it?
About 70%.
Yeah.
Between 65 and 70%, to be fair.
Yeah, it would be about that figure, approximately. But again, we'd have to really have a look at those cash flows, make sure we've got them right. But the one, what we're doing to date, it's pretty close to that, yeah. And you'll find that the Australian banks want a certain deposit when they loan offshore. But that, again, there's no difficulties in that process. We facilitate that in Australia without going into it, of course. We're dealing with all the major Australian banks there, and you can take advantage of the low interest rate there. It makes sense to do that.
Would it be unfair to say that to get that break-even point, a larger percentage of the deposit is required as opposed to investing in the UK, but that Australia would probably outweigh that challenge with greater capital growth opportunities over the next few years?
Oh, look,
which the UK may not match.
Scott might be able to answer that one better.
Look, it's a very interesting one because 12 months ago, as you know, I lived in London, and it was always, the cost of capital was always lower in comparison with the yields. So you were getting cash flow positive properties quicker.
Yes.
Okay. Whereas in Australia you weren't. And for me that was a challenge, and that has actually rectified itself. The one thing, as I said to you, is that Australia is very tax friendly, whereas England isn't. So if you do have that negative deficit, you can accumulate that loss, which if you move to Australia, you don't pay a cent in income tax until you've paid that off. Or if you sell, it goes against capital gains tax. Whereas in England or South Africa, you lose it outright, which I think is important. I do believe from an economic point of view, it's a very interesting question because the prospects from the Australian economy are certainly a lot healthier than the UK economy. And I think also from a tenancy point of view, from a vacancy point of view, here you've got 100% occupancy, and in London, or certainly outside of London, it's a bloodbath. In London, there's still good opportunities in London, but one has to be very careful where you rent in terms of the retrenchment. So there's a lot more variables in London that you don't have in Australia, and I think that's quite important, to take into account.
Can you just clarify what you said about the first question? I didn't quite understand what you were saying. No, the only question I was saying is it's always, ultimately people are, depending on the person, but ultimately quite a nice position to be in is where the rent matches the mortgage.
Yeah.
Because then you're not making all these payments. Okay.
So what was those figures again?
So no, actually, just probably the simplest version is to say what we've done to date. And again, I'm not involved with the finance side of it, but to let you know, we understand that living in South Africa, you can't continually take money out to keep topping up your investment. We understand it. So the way we do it, and this is how we look at it when it comes to finance, we have the specialists doing the finance for us. They offer you options so that we gear it properly. Like we find most South Africans obviously want to either be positively geared, which you is a term here which is quite well known, or neutrally geared, because again you can't keep topping up the bond.
You don't want to be negative. You want to be either neutral or positive.
Yeah.
I think also something
So
that's...
what are the ratios? I mean, you did mention some numbers. You're saying what sort of deposit would you have to put in to be neutral?
I mean, you could take it. It depends on the actual overall investment.
30-40%.
30%. Look, we're to be honest, having said that, we've got a lot of investors from South Africa who just want to put as much money out as they can, and then it's quite positively geared. So that seems to be quite a motivation. The break-even point.
It's between 30 and 35, basically. It depends. To be honest, it depends very much on the area and the yield. Do you know what I mean? Because different properties have better yield.
This is a question that pertains to this type of investment. But having read a couple of articles from the banks and their prospectus, there were 8 or 9 different ways in which you could mortgage a property, and there were rentable type of options versus home. What is the preferred way to do it?
Preferred way is in Australia, people get a bond or a mortgage which is interest only, and I believe that's something that you don't.
That's one of the 8.
Yeah, and that offers a lot of flexibility. People can pay off the capital, like keeps your repayments down. That's a very popular way. And in Australia, we educate people to keep your repayments down so you can look at purchasing another one, because our belief is 2 is better than 1. Oh, absolutely.
Look, I mean, to answer your question, their finance market is quite a lot more sophisticated than our market. There are a lot more options. What most of our clients tend to do is they take the interest only certainly for 5 years, but where they can make lump sum capital payments. So they get their bonus at the end of the year, they can put it in, that type of thing. And also what a lot of guys are looking at, which is interesting, is they're looking at fixing the interest rates. Because it's pretty obvious we're towards the bottom, if not at the bottom of the interest rate cycle. And again, you can fix for 5 or 10 years. Now, for me, there's 3 variables in property. You've got capital growth, you've got your expense, which is your mortgage payment, and you've got your income. Now, the advantage with the Ausinvest solution is you know what your income is. You can fix your mortgage, and your capital growth, well, that's where you've got to make sure you're doing your right research. And with all due respect, I actually just wanted to show you something. Give me 2 seconds here. This is just a, let me just get these screens closed for you. No, but I think what's very important is that people underestimate the amount of information that we actually give to people in terms of, and with regards to what Ozinvest actually produced. So for example, this here is a brochure. How do I go down?
What's the size of it?
Let me just see here. Zoom. Zoom. Yeah, that's what I'm looking for. So basically what they'll do is, like in any investment you'll look at, they'll give you all the information about the suburb, the public transport, the schools, the shopping centres, the hospitals. You know, whether your brother lives in the town, I doubt he could give you this type of information. The historical growth, what has been the best performing properties in the area. This is all the type of stuff that Richard works on. The shopping centres, because obviously that's going to bring about the demand. This particular property, the universities, the demographics, everything. I'm not going to go into detail. Depreciation schedule, which is important for tax and what we spoke about earlier. A lot of companies will charge you how many dollars? A lot of dollars normally for that type of thing. But I mean, and right through to rental letters, location maps. So everything you want to know about the property, you don't actually need to get on an airplane and actually fly, over there, because you've technically got it all. And I mean, something else. I don't know if you guys have seen this, but I mean, this is, I'm just showing you all the specifications, everything. And then down to, what is the property, what does it look like, what are the plans, the whole bang shoot. So, there's a hell of a lot of information that people can look at. And I think also just a bit of technology, which I'm not sure if you've seen before, but I just want to show you quickly. Richard was showing me where the development was, the particular one in Sydney. It's just launched now. Now, you think to yourself, well, I might want to jump on an airplane and go and see it. If I can save you $20,000, can I have a portion of it, basically? But if I show you here, so we've got the world. I'm sure you've all seen Google Earth before, but I doubt many of you have seen this application. So we're flying into Sydney now. It's quite a bit cheaper than flying on an airplane. That there is the site. So you're actually looking here. Let me just want to get the guys on the webinar onto the same page. Okay, so that there is the site. That is actually what is where those houses are being built at the moment. And if we zoom in,
you can see it's only a few available. Thanks, Richard. Keeping that for us.
So we can now basically take a look at the suburbs. So this is the houses. Oh, hang on. So this is the houses of what you will be buying in, all the way around. So you can see the suburb.
There's no high fences there either, you'll notice.
And I just want to go back to the road, because that is actually the road, and I can, hang on, what's going on here?
Go forward. A taxi there.
Okay, hang on. This webinar doesn't like the same. Let's get back here. No, I can't do it. While the guys are on the webinar, I can't get out of it. But basically, I mean, you can get an idea. If you can actually zoom in, if I go to that third camera, you can actually see the site and the guys being built. I don't know why it's not letting me. Let me just try something quickly. No, it ain't going to work. So anyway, but I mean, it just gives you an idea of, you can actually, no matter which property Richard is recommending or showing you, you can actually go into it and you can actually see everything you want to about that particular property.
Just on that, there is a time delay, so obviously it's not going to be updated.
Yeah, no, 100%. But I mean, I think the important thing is you can see what the suburb looks like and see what the other houses look like in the area and everything else. So, guys, is there anything else from anyone else's perspective that we haven't covered? Anything that that you think is pertinent that you would like us to go through? I see there's another question here. Let me just pull it up. Oh, just a compliment. No, George just said thanks very much. It was an interesting and effective event. Is there anything else, guys? Anything else that we can cover? I know it's quite late in the evening. We haven't bored you to death? Excellent. Listen, I want to thank you all very much for your time. I want to thank Richard and Steve for their time. Thanks very much for coming. Hopefully we've extracted some of that information that's in your head. We will be doing these, on a regular basis, not necessarily sitting here, but interviewing Richard when he's in Australia. So I want to thank everyone that's online, all the guys that joined us, all the people that are here. And for those of you that are here, hang around, enjoy some snacks. Set up an appointment if you want to with Kristen while Richard's here till Sunday. For those of you that are online, same for you. Obviously we're available and we can help you no matter where you are in the country or even outside the country. So thanks very much. Thanks to everyone.